All right, we're live. Sorry, I'm about 2 minutes late. I was kind of getting everything set up, trying to get my daughter all set up, get my camera set up. I should have had this set up already, but it's all good. I don't know what's up with my camera, man. Like, I use it every day. For some reason, it's getting blurry. I don't know. I got to figure that out. Got to figure that out. Anyway, well, you can see my daughter's room behind me, but it's all good. So let's see if my boy Kars is going to join today. This probably be a 30, 45-minute video today. Today we're going to discuss what are index funds and what are some popular index funds. My camera's really bothering me today. Oh well, we're just gonna leave it like that. But let me back up a little bit. Maybe that's what it is. But most of you should, if you haven't heard by now, heard about like Tesla, right? Tesla's joining the S&P 500. So if you go back and look at a few videos, I discuss what are indexes, and today we're going to discuss some, what are index funds and some popular index funds. So I'm just getting set up real quick. Finna open up this presentation. I like to put things in PowerPoint. I use PowerPoint a lot for work, so that's why I like to use PowerPoint. So you just allow me one more second. I'll bring it up and we'll get started here. Okay, cool. I got it up. Now let me just share my screen. Bam, and there you go. All right, cool. So you should definitely be able to see that. All right. So anyway, let me see. Let me log on to YouTube real quick. It's kind of hard. You gotta have like multiple channels open or multiple screens open. Because I have people joining me from YouTube, I have people joining me from Instagram, people joining from Facebook, and it's kind of hard to see all the comments at once. All right, cool. Now, now I can see. All right, so if anybody asks me any questions, for the most part, I can see it. So, as always, the first few minutes of this show, we kind of discuss what's going on in the market. Then we'll discuss the topic at hand, and then lastly, if there's any Q&A, we'll discuss. I answer any Q&A. But before we get started, well, no, let's get started right now. Let's just look at the market overall. Let's see what's been going on in the market. So I'm gonna use one of my favorite sites that I like to go to, finviz.com. And when I go back and watch some of these videos, I always forget like how small the text is, whatever. So you always got to tell me to make my screen bigger. So anyway, let's just look at the market as a whole and see what the market's been doing. So like I said, I go to FinViz, and one of the things I like to do is look at the groups. Right. So when you come look at these groups, this give you a good indication, kind of like, even though it's kind of like the past history, kind of give you a good indication of what direction the market might be moving in. So if you look, the 1 day performance was last Friday. Real estate was going up. Real estate was, let's just look at the top three. So you have real estate, you have communication services, and industrials. If you haven't been paying attention, Biden and his administration are big on renewing the industrial sector. So you might want to be on the lookout for that one, along with the communication services, because everything is shut down. That's very important. Services like Zoom, Facebook, all these different communication services, websites, apps are very good. But then look at the bottom three. So the bottom three is energy, utilities, and financials, and that's not really a big surprise, right? Because energy has been doing terrible for the since the coronavirus. Not only the past administration, but definitely this administration are big on going away from fossil fuels and going into renewable energy. So that's something you want to keep an eye out for. And utilities and financials has been crushed as well. But then when you look at the 1 week performance, you see the top three are tech, consumer cyclicals, and real estate. So even though real estate just made a 1 day performance and it's in the top three in the last week, it's kind of been bouncing back. Tech is always going to be there because tech is kind of involved in everything. Before, tech was kind of like it had its own sector, but now it's kind of embedded in everything because of the cloud and how everything connects to the internet. So if you haven't heard of IoT, Internet of Things, you know that any and everything can be connected to the internet, whether it's your cell phone, your computer, it could be your television, it could be even shoes now. Shoes now, they have these little sensors in there that kind of connect to the internet as well. So, tech is oh, my boy Kai's is logging on. Tech is spread out through a lot of different sectors and industries as well. But then you look at the bottom three in the last week. Oh, it's no surprise. Energy is at the bottom, along with utilities and communication services. And then you could go out and look at the 1 month. Basic materials been going up. Why? Because all these new computer chips for everything that's connected to the internet. Not only that, they're coming out with these 5G phones, so you need some of that basic material to build all these new devices that we're using. And energy has kind of made a comeback. It has to make a comeback because even though the world is moving away from fossil fuels to renewable energy, you still need fossil fuels. So if you go do a little research, you'll realize that fossil fuels are needed to create renewable energy. So, fossil fuels are not going away. It's still going to be used. But anyway, then you go back to the 3 month. Like I say, energy's been making a comeback because if you look at, let's just see the 1 year performance, energy is down. So, um, it can only go down so far, before it makes some type of comeback. And you can see in the last 3 months, it's made a little bit of comeback. And if you go look at like Exxon Mobil and some of those energy companies, you'll see it kind of making a comeback. So that's what the market is doing as a whole. But let's just get into the lesson today. Today is all about index funds. We're not going to cover ETFs and REITs today. We're just going to cover index funds. So if you go look at a few videos back, I told you exactly what a index is. A brief explanation is an index is just a something that you use as a benchmark. So instead of just saying, "Hey, how did all 5,000 of the stocks did?" They just say, "Hey, how did all the stocks in the S&P 500 do?" How did all the stocks that's part of the Dow do or the NASDAQ do? And those are just used for benchmarks to see how the economy as a whole or the stock market as a whole is doing. So when we look at index funds, we're gonna say, what are not only what are index funds, we're gonna say like what's the benefits, the pros and cons to using or buying index funds. And I would tell you this right now. If you're new to investing, right, and you want the simplest, easiest, most passive way to invest, index funds are ideal for you. Why? Well, you sit here and look at this. It says, all right, what are index funds? So instead of buying individual stocks, Microsoft, Google, Facebook, they always tell you you need to be diversified. You need to buy multiple stocks. You don't want to put all your eggs in one basket, so to speak. So they tell you to diversify. Well, back in the day, you would buy multiple stocks, but now they kind of do that for you. So an index fund is kind of like a what's up, Kaiser? Let me add my boy to here. What's up, brother? How you
Hey man, I'm good, 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 good.
good?
How are you?
I just started, man. I was telling them what are index funds, so you came right on time. I already went over kind of last week in the top three performances based on the different sectors. So now today we're talking about index funds.
Okay.
So So I was just telling them, like, investing in index funds is the most safest, easiest passive way to invest. Because as most people know, when you get into investing, they say diversify, buy multiple stocks, right? And
Mm-hmm.
so let me go back and bring up FinViz. Let's just go to this maps.
Yeah.
So when you look at this, like you already know all this, Kaiser, but
Mm-hmm.
sorry. You can buy all these stocks that you see here, Microsoft, Apple, Visa, but they're quite expensive. If you look at Google, it's $1,700 a share. So I don't know
Yeah.
if most people money, but me personally, I can afford to buy all these. So what you can do is buy a index fund. And so when you invest in an index fund, essentially what you're doing, like this, what we're looking at right now is the S&P 500. You essentially investing in all of these companies. Every single one that you see right here, you're pretty much investing in them by buying one fund. But here's the difference. If you buy Microsoft, until you sell Microsoft, you own shares of Microsoft. So
Yeah.
technically, you can look at yourself as part owner. You know,
Yeah.
but when you buy an index fund, even though all these funds are in that index fund, you don't actually own these stocks. You don't have stock actually in Google or Facebook or Apple. You own the fund that own those companies. So that's the only major, you know, difference between buying the actual index funds and the stocks themselves. So hopefully that makes sense to most people.
Yeah.
So let me just go back to this. So as I said, it's the easiest way of investing because when you listen to the news and they say, hey, the market went up 2%. Well, if all you're doing is investing in index funds, the same one over and over, if you hear the market went up 2%, your portfolio went up 2%. If it went down 1%, your portfolio went down 1%. It's
1%.
the easiest way to track. You don't have to track, okay, I own Apple, it went down 2%. Should I sell? Tesla went down today. Should I sell or should I buy? You're just buying the same fund over and over. And the main reason people are doing this, not only is it because it's easy, at the end of the year, at the end of the year, your goal is obviously to make money. So at the end of the year, if you buy these individual stocks and you realize that your portfolio did not beat any of these index benchmarks, then you should invest it in the index. So what does that mean? Well, that means if you look at this, the S&P 500 on the average, you could actually Google this. Google the historical returns of the S&P 500. The average is 9.8%. So let's just round it up to 10. Every year, if you invest in an index fund, on average, you'll earn about 10%. So if you invest in these individual stocks and at the end of the year, your portfolio is not up by 10%, then you might as well stop picking these individual stocks and make it very simple and invest in one of these index funds. That's what they're there for. They're pretty simple. I don't know if you got anything to add to that, Kaiser, but
Yeah. So I think what all that you said was like on point. Sometimes I believe that to save yourself some of the stress in terms of, like, let's say you're a very busy person and you may not probably sit down to do all this technical analysis and fundamental analysis. One of the ways that you can shed off some stress is focusing on index funds, and whether it's a VTI or S&P, just as you said, index. I believe in dollar cost averaging a lot. You know me very well.
yeah, that's a good approach.
You
Yeah,
know me very well, right? So,
yeah,
like, man, don't say if it's every month or every 2 weeks you want to put something aside, or every month put something aside and buy an index fund. It's really going to help, and I believe what that you said is just on point right there. And I think one of the important uh, things that sometimes people want a differentiation about is when it comes to difference between, maybe you may probably throw more light on that so that we can all learn that also, is when it comes to mutual funds and index funds and ETFs, like those three different. And I know among all of them, uh, one has a couple of charges, hidden charges around it. Yeah. So, but I know you sometimes take things a bit deeper, so probably may also try and throw more light around that. But index funds is one of the ways that you can really help yourself, save
yeah.
yourself a lot of time to invest in. Yeah.
That's well put. Kind of like you said, like if you don't want the daily stress or if you're very busy, I still work my 8 to 5. So like, if anybody following me on Instagram, some days I'm posting every 5 minutes. Sometimes you don't hear from me from a day or two because
Yeah.
I literally, busy with meetings and or my daughter. So like if you're very busy and you travel a lot, you don't have time to watch the market every day, like you said. S&P, index fund is perfect for you. And so when you said mutual funds versus index funds versus ETFs, just know that mutual funds and index funds are very similar. It's just a collection of stocks. The
Okay.
big difference is, yes, you have a active manager for a mutual fund. They actually pick these stocks for you to add in the mutual fund. The big difference is their fees, right? Because if they're an active manager managing your 401k mutual fund, they get paid. So, if the market goes up 10%, they're going to get their 1 or 2% commission. But guess what? Even if the market goes down 10% or your mutual fund goes down 10% based on their stocks that they added to your mutual fund, they still get paid. That's a big difference. So when you got a mutual fund, you got somebody that you're paying to pretty much manage your portfolio, and whether it does good or not, they get paid. And that
Mm,
kind of sucks because it's a very slow way of getting rich, a very, very slow way, especially if doing now when the economy is down and your portfolio or your 401k is going down. And not only is it going down, you got this manager taking 1 or 2% off of it. It's like how are you getting paid when you're losing me money? It just not
yeah,
only that, your money in your 401k, you can't leverage it.
yeah.
So that's one of the I guess the cons of having a mutual fund, and the difference because the index funds, it's not really actively managed. So kind of like Tesla, right? It's joining the S&P 500 tomorrow. Matter of fact, there's no active managers. Just when it meets a certain criteria, like yeah, certain stocks get bumped out, certain new ones come in. There is a expense ratio which is very low compared to the mutual fund fees, but that's the major difference, just fees.
Yeah. So I realized that I was having a conversation with a friend recently, and this thing I was actually also came up, and I think when it comes to investment into mutual funds, uh, unlike some of the ETFs that we know about, that you can see expense ratio showing there, glaring at you that this is the percentage that you're going to pay
Yeah.
at the end of the year. When it comes to some mutual funds, I think the major problem that people have is the hidden charges. So sometimes you're buying a
Oh
mutual
yeah.
fund and and you see front load or back load, and people don't understand what that actually means. Some of them you only see only front load; they will not show you, or they will not see, or you not see it on your statement that there is a back load. So front load, uh, as part of my research, I came to realize that those are charges that they take when you put in the money, and back loads are charges that they also take when you're taking the money off. So it's like they're charging you both back and front, you know. And these are things that you basically need to understand or know when you want to go into some of these funds very well. Yeah. So
So I brought
I
this
think,
up. So I don't know if you remember, but this BTTRX TRX is pretty much like a
yeah, it's
mutual
on my
fund.
watch list actually.
I know it's on mine too. I've been looking at it,
I've been
and it's
looking
up
at
like
it.
30%. I'm telling everybody about it. I haven't even invested in it, but it's pretty
Yeah.
much like a mutual fund. But if you go look at the expense ratio, it's 2.2%.
Okay.
So every $1,000 you invest, what is that, like $22 or something like that you have to pay.
Hmm.
And but when you go look at this other index fund, VOO, which we're going to cover here shortly, its expense ratio is 0.03.
Hmm.
So that's pretty much the big difference between a mutual fund, which this is kind of like a mutual fund, and an index fund, the expense ratio. So for this one, for every $1,000, I invest, I'm only spending what, 30 cents compared to $22.
Yeah.
It's a big difference right there.
Yeah.
Huge difference. So, so now that people know, what are index funds, what are some popular ones? So I just put a few up here. We got SPY, and I like SPY. So these are actually clickable links. Let's see if it's gonna work. It's gonna take you to Zacks. And what's cool about, you could go click on this, right, and click on the holdings. So when you click on the holdings, you could go to Zacks.com or barchart.com to see exactly what you're buying when you buying this index fund. And so there, right there, you see, when you buy this SPY, you're buying Apple, Microsoft, Amazon, and you could just go on. It's like 51 pages. I'm not gonna go through all of these,
Hmm.
but not only that, you can see the breakdown. So for every $100 that you spend in this fund, even though the fund is what 370 per share, but to make it simple, every $100 you invest, you're pretty much investing $6.55 in Apple, $5.62 in Microsoft and Amazon. So when we go back to, let's see if it's still open. I closed it. When we go back to FinViz, and I was showing you that map earlier, when you invest in SPY, you're pretty much getting all this. And as of tomorrow, Tesla be added to this list.
Yeah, that's a huge one. I'm wondering what percentage they'll be covering or the weight that they'll be
Ooh.
covering there. Do you know probably
Man, I was
highest
reading
point?
some today, like the weight is going to be the highest ever in the S&P. I think it was like 7%. I could be wrong, but I think it was like
Okay.
7 or 8, somewhere around there. It's like the top four of all time. So,
Hmm. Hmm. That's
so
interesting. Yeah.
it's going to be up there. It's going to be interesting to see what happens
Yeah.
tomorrow. Not
I,
only with Tesla entering the S&P 500, but with this stimulus bill potentially being passed,
yeah.
tomorrow's going to be an interesting day.
Trust me. Like I've been seeing news flying everywhere. I've been seeing 900 somewhere. I've been seeing 600 somewhere.
Yeah.
Everybody posting what they know until I'm sure tomorrow, if things are made clear, then we can really see what goes on. But hey,
I'm gonna tell you
we
about
are
the
very
best part about being invested, in the market, you know, because regardless of the news that come out tomorrow, like me and you, we're good. Like if
Mhm.
it goes up, man, we're just, hey, yeah, keep going up,
Keep going.
you know.
If it
If
goes
it goes,
down, we buy
then
more.
what? Yeah. If it goes down, we're gonna buy more. And even if it goes down, more than likely, let's say it's at 20 and it goes down to 18. More than likely, I bought it like 12 or 15. So even if it goes down, I'm still up, and I'm just gonna buy
Mhm.
more. It's just I don't think people who yet to start investing realize the just
Yeah,
how easy it
it's
gets.
that's the thing. Like the risk tolerance level, it's a huge thing that I had to personally take myself through
Hmm.
to 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 jump into this whole investing thing. So that's one of the things that anytime anybody wants to talk to me about investment, that's one of the first thing I try to talk to them about. Like, what is your risk tolerance level? Oh, somebody can call you like, hey, I have 10K. What should I put in? What should I? I'm like, bro, it's not about what you can put in.
Yeah,
Beyond what you can put in, like, do you understand the basics enough? Your foundation is always the mystery behind your staying power. I always say that, like, if your foundation is good, uh, you don't mind something. It's not about what your 10K can do or what you can put it in. But if you lose it to, will it be okay? Once you get fever all of a sudden because you've lost 10K and stuff like that. Yeah. So um, for some of us, with dollar cost averaging, we understand we're doing it gradually, small, small, and gradually we're getting there. So yeah, it's always good to
yes.
look at that.
So you keep saying cost averaging. So it's two strategies you could use.
Hmm.
So it's kind of like you say, like somebody say, like, hey, I got 10K, man. Like, what should I do? Like, you can put the whole 10K in there if you want to. It's like, should I? Like, I would, but I don't know your risk tolerance. I don't
Yeah.
know how you're gonna react as the stock goes up or down. But like you said, one thing you can do, like let's say you put the whole 10K in there. That doesn't mean you have to spend the whole 10K and invest in stocks immediately. You could just kind of leave it in there like you leave your bank account.
Hmm.
Uh, and then let's say every week or every month, like okay, I'm gonna spend 1,000 and buy SPY. You
Yeah.
know, and guess what? You could do the dollar cost averaging. Man, it's another name. I don't want to get them crisscross. Dawes collar averaging, I think is the other one. So dollar cost averaging is when every week or every month on a specified time frame you buy the same stock over and over,
Hmm.
regardless. Dollar cost averaging, which I think is what you're doing. And let's say you buy it at 10, and then next week it goes back down to 5, but then you buy it again, right? And you
Yeah.
lower down your average cost.
Yeah.
So those are two easy approaches you could take. If it goes down, just keep buying more, or every week or every month at a set interval, just keep buying the same stock. If you do use those two strategies, you cannot go wrong. If you pick buying the right stock, you can't.
Yeah.
But anyway, so here's some more popular index funds. So we have SPY, which is the oldest ETF out there. So that's why a lot of people like this one. Then you have IVV, then you have VOO, you have QQQ. Let me just click on some of these. So QQQ is a different index funds. It's tied to the Nasdaq. It's tied to the Nasdaq pretty much the top 100, and those are mainly tech stocks. So if you go click on its holdings, you're gonna see a lot of tech stocks in here. So yeah, you see the Apples and the Microsoft, Amazon, Facebooks. More than likely you're not gonna see like any healthcare stocks like J&J or Pfizer or any of that. You shouldn't. It should be mostly tech stocks in here, or the mostly tech stocks. It might be a few non-tech stocks in here, but mostly it should be tech. And that's what you pretty much see in Activision, Micron, Autodesk, Charter, Zoom, Gilead Sciences for the most part.
Yeah. I think I see Luluman also there, right? So something like, yeah.
Said Lululemon, this one?
Yeah. Oh, okay. I saw something. I just wanted to be sure what I just saw. Yeah.
Yeah, like you. All right, I'm glad you kind of brought that out because there are some non-tech stocks. I see Dr. Pepper on here, Monster, but for the most part, all of these are tech stocks. And then VU is just let's go back to FinViz. So when you look at all these index funds right here, say, man, how do I know which one to pick? Okay, like I said, SPY is the oldest, but if you look at these charts, right? And I
Mhm.
wish I had a laser pen or something. But if you look at those charts, you'll notice one thing: they all look identical. Okay. So they all look identical. In a sense, it's telling you if all the charts are identical, it really doesn't matter which one you pick if all the charts are the same and they all behaving the same. But what you will notice is price differences. So like, yeah, you see SPYs at the top for 369.18. What's the difference between that one and if you scroll down to midway, SCHB, which is at $90? Since they
Mm.
pretty much have the same chart, but
Yeah.
so based on how much money you have, you could pick one of these cheaper ones. And at the same time, you can always go do a little bit more research on those if you want to see what they are. You can always go to Zacks.com and click on the holdings to see exactly what you're buying. And you'll notice that most of these are pretty much the same. So we compare QQQ versus VOO.
Mhm.
You see that QQQ has Apple, Microsoft, Amazon, but Apple's at what, like 13%, but VOO, it has Apple, but it's at like 7%. So sometimes that's a major difference. There might be one or two different stocks because if you can see VOO, it has Berkshire Hathaway, and then you have Johnson and Johnson, you have Visa. So it might have different stocks and their weights might be a little bit different. So it depends on you exactly what you want to invest in. So you can always go to Zacks.com. You could go, what's another site that I use to do some research on these? You could go to Bar Chart if you want to.
Bar chart. Okay.
Yeah, that's a new one that I learned from the Come Up series. Mark Monroe, he's always
Yeah.
talking about Bar
Man,
Chart.
Mark, that gentleman has got information. So I'm like, where does he get all that from? Like, he's
All
got a
right,
lot of information that he always shares. Like,
yeah, he's very, I like that brother, him and
yeah,
Joe Land.
yeah.
So yeah, you could go here. I just typed in VOO and constituents. Same thing as holdings. And then you go see exactly what you're invested in. So there you go. Apple, Microsoft. You can do this for all the index funds. So I just happen to know them off the top of my head. IVV, same thing. You go down there and see the breakdown, see exactly what you're investing in. And I'm gonna tell you what's cool about bar chart as well. You could go look at this performance report. And what's cool about this, you can see how it's been performing over the last 5 days, month. I like to look at what it's been doing over the last year and the last 2 years. So last year, what are we looking at? IVV and went up what 16%. Actually, I'm gonna show you a good one. Let's look at QQQ. No, this one went up. So yeah, in the last year, QQQ went up almost 50%. In the last
Mm.
2 years, it went up 100%. So who wouldn't want to double their money in the next 2 years? Last 5 years, and hey, last 20
Are the
years.
years also shown there?
Yeah, so here's the years.
Okay, 5 years, and
And,
it's gone up. How many
hu-
percent?
175%.
Okay.
And when you get into option trading, I
Hmm.
know you've been asking questions.
Yeah.
This is what we use to determine our strike price. So we use
Oh.
bar chart. Yeah. So if you're always trying to figure out, man, how do I come up with a strike price, right? You know, sorry to go off on this tangent, but hey, this is all about money. You could go here and let's say you want to get into a 2-year contract. Okay, well, you go here and you look at the 2-year performance, and it's a formula that they use. But between me and you and anybody who's watching right now, I'm gonna throw this out there for you. So there's a formula I gotta memorize. I think I might have seen you the Excel spreadsheet, but somebody was so cool in Mark's group that they made
Mhm.
this website. So go to
Oh,
strikepricecalculator.com. You might want to double check it. I double checked it, but
okay.
choose, what year time frame you want to do and just type in your symbols. So like I'm in
Strike price
XLK, you
calculator.
just add that
Hmm.
and bam, there's your strike price, $156 if you get into a 3-year option contract. If you do 2 years, 166. So it takes its current price, it looks at the performance. Um, if you're into option, let's say you get in a 2-year contract, you don't want to wait the whole 2 years. You want to get out early. So that's why this 1.5, you always get out early. And then they got this correction factor because, stocks go up 20, 30%. Then it's a little correction, it drops. So they put all that into this formula and create this strike price for you.
So the strike price that I see there, I'm not so good with the option thing. I've been asking you a lot of questions about that. Uh,
Okay.
so the strike price there should be the price that you should come out, or that's the price that you should. What's that?
Yeah. So let's just do this real quick. So actually, give me a stock that you're thinking about investing in, and we'll do the breakdown.
So let's take Jet.
Jet,
Okay.
the Jet GT.
Yes.
All right, cool. Because I never heard of that one.
No. So add an S to it.
Oh, Jets. Okay.
It's an ETF. I
Okay.
can you are
All right.
you is it possible to place options on ETFs too?
Yeah.
Okay.
Yeah. I got one on
Oh, okay.
XLK.
XLK. Yeah, yeah. Sorry, I can see that there.
All right. So cool. Let's go look at. Now let's go back to bar chart.
Jet is based on the ETF, airline ETF. I know currently it's like the performance is not
Damn it.
good now, but just for example purposes, we can also use Apple, any of them.
Okay. So let's go to bar chart. Right. Jets. Damn it. I cannot get things right today. Sorry, I've been asleep most of the day. I got my daughter this weekend. We've been doing
You
these
need to
crazy
rest, man.
YouTube challenges. All right. So first of all, I just want to see, since I don't know much about jets, I want to see what am I buying? U.S. Global Jets. Oh, okay, airlines. Okay. So Southwest, Delta. Now that I have heard about this, I just forgot about this. Okay, so you betting that the airline industry is going to recover. So let me look at the performance. So let's look at the 1 year. It's down 30%. That makes sense. 2 years is down 23. Okay, cool. So what is it trading at right now? It's trading at 22.53. All right. So if you get into a 2-year contract, they saying your strike price need to be 26.61. That makes sense. So let's go look at Jets real quick. Jets.
So my question is the 26 51 or 61 is the price that you need to buy it.
Yes, that's the price you need to
Okay.
buy it. So I'm
Okay.
gonna open up my E-Trade because it's better. I mean, you could use Yahoo if you want to. Let's just use Yahoo. Then I'll open up E-Trade. So when you go and you click on options, you bring up the option chain. It's got all these dates on here.
Mhm.
So we picked a 2-year. So with these dates, since we picked 2 years, let's pick this January 20, 2023.
Mhm.
So anything that's blue, that means it's in the money. So
Yeah.
yeah. Anytime, yeah, you don't understand some or you do understand, say I got that. Keep moving. So all these are in the blue because why? It's trading at 22.53 and the strike price is 22. So it's trading above the strike price. So it's in the blue or in the money. So it told you to buy what, the 26.61.
Mhm.
So you want to buy this one right here,
Okay.
right? So you would click this one.
So that will be out of the money or what?
Yes, this one is definitely out of the money. It's definitely out of the money.
Oh, okay. I
and it
see it in
gives
the
you
morning
a.
at the top.
Let me go back. It gives you a bigger return if you buy it out of the money.
Mm.
All right. And so you see here the last price, the bid, and the ask. So the last price somebody paid for this was $5. So you know when you buying a contract, you buying 100 shares. So when you
Yeah.
see this price, you have to multiply it by 100.
Mm.
So, but somebody managed to buy it at $4.40. So essentially, one contract is going to cost you between $440 and $500.
Mm. Okay.
So somebody might ask, well, why would I do that? Well, let's say if you wanted 100 shares, if you bought it at the current price at 22.53, you need 2,000, like $2,200.
Hmm.
But now one contract is worth 100 shares. You could buy it for like 500. So you might say, well, how do I know if I make any money? Well, you know, once January, what is it, 2023 come,
Yeah.
if Jets is trading above this $26, then you're in the money. You make money. If it's trading at $25.99, yeah, you lost everything. That's why
Mm.
you don't want to wait to the end,
Yeah.
because a year from now, even if that stock has went down, this option contract will still be worth something. It might be worth half, but it's still worth something. So might get some of your money back. If you wait to the expiration date and it's out of the money, you pretty much lost everything. So
Mm.
that's why they say you get out early. Not only do you get out early because the closer you get to your expiration date, the more risks you take. So, like, a year into your 2-year contract, if you're up 500%, take your 500% and be happy,
Mm-hmm.
unless you know
Mm-hmm.
something else might happen or whatever.
Okay. Okay.
But how do you
That's cool.
go ahead?
No, I'm saying like that's good. I think when it comes to the options um, game, like I'm still gathering the information. I'll still be calling on you when I start that. But at least I'm still getting to understand that. That means you get to make more money um, compared to the regular stock price that you buy that goes up at a given time,
Yeah,
right?
yeah,
Yeah,
because you could do the calculation, right? So we would just
yeah.
look at here, and that's why I like using E-Trade because Yahoo they do their best, but it's just funny looking at their layout. So when you come to E-Trade and you click on options, it brings up this nice chain, right? And I could just scroll through January 2023. We were looking at this 26 strike price. Then when I click on trade, if I actually want to buy it, this is what's going to come up. So I want to buy the call because,
Mm-hmm.
I'm bullish. I want to buy the open. I only want to buy one unless you want to buy more. Here's the date, strike price. This will change throughout the day. All right, you leave all this. Now, you either want to buy the market, which I never do. I want to set my own price. So if
Okay.
this was live right now, I
Mm-hmm.
would try to pick somewhere in between the middle. So 440 between 520 is an 80% difference. So I'll take half of that. All right, and then like $4.80, which is $480, and see if that'll work. It might go through, it might not. You might have to keep adjusting it, but that's how I do it. You might need to
Okay.
go higher because the last one traded at $5, but you just never know.
Yeah.
I usually like to buy it when the market is going down. That's
Down.
the best way to get the best prices, right?
Yeah.
But the way you do your calculations, and there's some more stuff I'll show you on here, but let's say, all right, so your strike price is 26. Let's say it ended up at $30, right?
Mm-hmm.
Ended up at 30. Um, the strike, so you take 30 minus 26, $4.
Okay.
So four times, depending on how many contracts you buy, you only buy one contract, but
So
there's a
four times
hundred.
100.
Yeah, because you buy one contract, there's 100 shares in a contract. So
Okay.
that'll be your profit if,
So your profit will be 400.
yeah, if it went to $30.
Okay. Okay.
If you bought at a strike price at
Hmm.
26, it might be a little different because of these Greeks, but it'd be close to that. And I can show you some examples. So now here's a great example. So I've been talking about me taking my daughter 77 to 1,000, right?
Yeah.
So I did a good thing and I did a bad thing.
Okay.
The good thing is I sold some of it and I bought this MO, right, to get her
Okay.
where I call her job.
Hmm.
But that Friday, I took the rest of her earnings and I bought some more contracts. Well, if you've been paying attention to my post, uh, Virgin Galactic, they last lunch, it failed.
Yeah, you failed. Yeah, I saw the
It
video.
failed. And as a result, her option contract got killed. So this one expires next Friday at 33. I think Virgin Galactic is trading at $25 right now. So it went from being worth pretty much $600 to $12 now.
Hmm.
That's why you don't want to wait all the way to the end. I took a huge gamble because I was gambling with her money. I mean, we're still up from 72 dollars, so I'm still happy. But yeah, I lost
Okay.
$500 for her by taking a gamble.
Okay. I think what we need to do is we should have maybe one of our days. Then we'll come and we just go into
Yeah,
the options, so
yeah. I'm
that
sorry,
we
I got
can get
off,
our,
man. You got me
yeah,
excited,
our
but
mind around it and all that also very well. That it's very interesting. Yeah.
yeah, I went off on a tangent. I'm glad you said that because yeah, because pretty much that's what I was going to cover today on index funds. We
Okay.
covered what are index funds. What are
Hmm.
the popular index funds, and there are a few more, like you mentioned, BTI,
Yeah.
and there's a lot of index funds out there. But those are an easy way of investing. I recommend it to any and everybody. And since I have, what browser is this? So I have two browsers. Microsoft Edge, I don't have any in my bookmarks. But there's another website you could go to do some more research on index funds. I can't find it now, but I'll post it later. But anyway, I think there's only one person online. I don't know if that's me or you, but we
I
always
normally
say the end
realize
for
that.
Q&A.
Yeah, I realize that most people sometimes after we're done, then they just they come on there to watch later. But maybe
Yeah,
you're giving valuable information there. So I'm trying to get a the calculator thing that you just did. Is it strike price calculator?
let's see here. StrikePriceCalculator.com.
Okay. So,
So yeah, we covered what I wanted to cover today. Thank you for joining. If anybody have any questions, can you post the websites, please? All right, which websites would you like to see, Maria? The strike price calculator here. Got you. That's for figuring out a strike price if you're into option trading. What other websites did I show you today? Let me make sure. I think bar chart. Yeah, you definitely want to use bar chart. Let's post bar chart as well.
it says strikepricecalculator.com.
Yes, strikepricecalculator.com. The one with BU something. Hopefully you're talking about bar chart, Maria, because I went to bar chart. You can use Zax as well. Yeah, let me just post Zax. You can use Zax as well. I prefer bar chart. The hell is this stickyball.net? I don't know what the hell that is. Sorry, y'all. You use Zax.com as well. It's pretty cool. All right, yeah. She's talking about bar chart. Bar chart is really, really cool. For those who might not have a good brokerage, I know a lot of people still use like Robinhood and some of those apps. You got to use what you can use until you switch. But until then, until you switch, yeah, I would definitely go to bar chart. I'm gonna tell you something else cool about bar chart. So not only the performance report, once you get into using indicators and learn how to use like charts and learn how to do like some technical analysis.
Yeah, that's one
Uh,
thing that we probably have to look at one of the days, so that you can take us through that.
yeah, this right here is pretty cool right here, because it's gonna kind of give you a breakdown. Once you start learning what RSI mean, and to be honest with you guys, it's not that hard. It's very simple. MACD, I only use like two or three indicators. It kind of give you an indication, like, all right, cool. We reached this level, and so like right here it says pivot point, second levels resistance reach. So once you reach that level, if it goes below that, it'll give you like, hey. Here's the next level. If it goes below that, it's gonna keep dropping and it might go all the way here. So it kind of give you a good indication of like, all right, it's trending down. Like how far could it go? Okay, by using this cheat sheet. And if it's trending up, how far could it go up? So not only it's got these pivots, Fibonacci, it's got that, moving averages, pretty cool. I usually don't look at this and I don't look at that. I really don't even look at Fibonacci, but I don't even. But so that's pretty cool. You could go in here and look at some trading strategies. You might have to pay for that. That's pretty cool. All the option stuff is here. Historical data, that's pretty cool. Even though you could get this on Yahoo Finance. This is cool too. If you're looking at some of these ETFs, you might want to know what are their competitors. Not only ETFs, just general stocks as well. I like that. So yeah, bar chart is the shit. The shiznit.
Still trying to pull out the strike price calculator thing. I see a whole lot when you key in that. I'm wondering which one is the exact one.
This one.
Hmm. Strike price calculator.
That's what's coming up when you type it.
No, I kind of see so many different ones. Maybe let me type.
Yeah, when they put this together, actually, let me see, because I have this. Sorry, you're gonna see all my work stuff, but what did I do with this? So, strike price calculator, where are you? Option, here we go. You can see behind the scenes, you can see how the formula works. So yeah, I just did mine in Excel, but I'm glad they put this together. So actually, let me compare theirs to mine. That's what I should do. But I'll tell you how the formula works, right? So basically, where is it? So C divided by 2. So like I said, if you're looking at the 3-year performance, it's going to divide that by the divider time, and then they're going to multiply that by the correction, and then you add that to the current strike price, and that's how you get your option price.
Option price. Okay.
Yeah, that makes sense. So yeah, they take the performance. Where is it at? The performance divided by the time divider. So yeah, if you're in a 3-year contract, you want to get out in like 2, maybe 2.5. If you're in a 2-year contract, you want to get out in a year or year and a half. Then they multiply that by a correction because there's always a correction, whether it's 10% or whatever. You're gonna see a correction here shortly. After Tesla enter into the S&P 500 and all these stocks go up, it's gonna go down. Trust me. And then they add that to the current stock price, and that's how they get their option price. Oh, and one more important thing. So let's say your price is like 161. You can either choose the strike price above or below that. So if my price is 161, I could choose the strike price at 162, or I could choose one on 160. It kind of depends on which one you want to choose.
Okay. I think
Hopefully
I
that.
think as I said, we need like a whole day to maybe start the basics of options so that we can
Yeah,
start
I think you're
gradually when we
right.
are done with this one. But
All
probably
right.
I'll be grateful if you can send me the link to that strike price calculator because I still can't pull it up here. I'm
Oh, yeah,
wondering
okay.
why. Yeah.
Okay,
Maybe
I'll send it to you. That's
yeah.
kind of weird. Yeah, I
Yeah.
just seen the link.
I have the bar chart, I have the ETF DB, I have a couple of those ones that you shared with me some time back. Like I have all of them copied. I don't know why I'm trying to open this. This is not showing up. But when you send me the link, I'll just click on the link and use the link directly.
Okay, well, I think that is it for today. I don't know if anybody got any questions. Maria G, thanks for joining. If you got any questions, Maria, anybody on Instagram got any questions? Facebook, Kai, if you got any questions, if you just want to shout anything,
Yeah.
saw you've been posting your books here lately. That's pretty cool. So I don't know if you're working on a new book.
Yeah, I kind of started one with a friend, but I paused the whole thing, and I'm looking into next year, uh, trying to see how best I can jump on a couple of them. But most of the time, we have moods that you need when you're writing. Sometimes you're just not in the mood to write. you know,
Yeah.
Yeah, and every most books, I would say that the ones that I put out, like I have this one here. You've seen this one, right? 101 Impact Capsules.
No, I've seen the other, but I haven't seen that one.
You've not seen this?
No, I haven't. Okay.
Yeah,
Oh,
this the yeah. I 101 Impact Capsules right here.
okay.
This is the one that you've seen.
Yes, that's the one I
Yeah,
bought. Yeah.
yeah. This so most sometimes you uh this more or less like books on quotes. It's quotable quotes and all that, like some wisdom keys and all that that I have.
Cool.
Um, yeah, I'm
Gotta
trying
send me
to
the
do
link,
another
bro.
one. Come again?
Yeah, send me the link. If it's on
Yeah,
Amazon, you know I support you.
yeah. I'm gonna do that. I'm gonna do that. I'm trying to do one on leaving behind lasting legacies that I'm going to talk about. It's going to be probably something of that size, but I'm still going to
Okay.
talk about all this money related friends. Don't be surprised if you see your name in the book. You know.
Oh, brother, I'll be excited. I would like, yeah.
Don't be surprised if you see your name in the book, like you know. So I don't really have questions per se, but
Okay. So,
what I would say is thank you rather. I would say a big thank you, you know, for taking the time coming out to um, share all this information with us, and especially somebody like me. We've spoken a lot, looking at immigrants and some of these informations. There are a couple of friends that I meet personally, and we talk about this, and they tell me they don't know what I'm talking about. Like I'm like, and some of them have even been here like years.
yeah.
Yeah. So it's all about the access to the information, you know, and how you are ready to learn it. So there are a few other things that we'll talk behind the scenes about. I'll call you and we'll discuss that.
Okay.
But yeah, but I believe that at least right now I work where where I work basically, and Friday, Saturday, Sunday are like busy times. Like
Yeah.
I wish some of those days are days that I will not go to work, but rather be at home and rest because of all the human contact and interactions here and there. So you see people in queues in the Gucci store. You see people in lines, Louis Vuitton. You see all the lines, and some have really worked hard and they're spending their money on that. That's very good. That's very important. But also, sometimes you try to find out, okay, for those that are just buying it, are they also making money from them? That's as we all say, you know. So that if you buy a Gucci wallet, you're buying a Gucci bag. It's very good. It's very nice. They have quality products. That's very good. But at least try and buy their stock too, so that when it
Thank you.
goes up, you can also make some money out of that. Yeah. Beyond that, I believe finance is something that we can't do away with, or money is something that we can't do away with. So we have to keep on learning. So
Okay.
once again, I'll say thank you very much for this opportunity. I'm super grateful for it, and I have a saying. I have something that I always say. I say everybody you meet in life is a teacher, and every day is a classroom. So everybody you meet in life is a teacher. It may be a kid, a small boy, small girl. They will teach you something. Have you ever tried playing a video game with a kid before?
Yeah.
They'll let you feel you are 80 years or 100 years, like you don't know
Yeah.
anything. Like, yeah.
Yeah.
They'll teach you something that you never know about.
Yeah.
So everybody you meet in life is a teacher. Every day that you have the opportunity to be alive, every day is a classroom. So every day is a day to learn something new you
Yeah.
know yeah, and anytime when I come on here, I always learn something new. So I would say I'm very, very grateful. Thank you so much. Yeah.
Thank you as well, man. Like you kind of hinted on, like this is knowledge that I think we all should know. It's been hidden knowledge, so once I learned it, I've got to pass it forward. I used to have courses and stuff like that. I really don't have any now. One of my followers sent me a message the other day, like, "Hey, man, like, how can I pay you?" I said, I used to let people pay me, but don't pay me now. I'll teach you for free. My only requirement is, you help somebody else pass it forward. So
Yeah.
somebody helped me, but I did want to kind of briefly go over, some things that we might cover that we are going to cover in the future. So,
Yeah.
we
We
talked
have
about,
couple of time stuffs to cover, right?
Yeah, like we
Yeah.
covered, index funds, why you don't
Hmm.
put your money in the bank. But now next week or going forward, we'll teach you how to research these. So I kind of gave you some, but
Yeah.
Vanguard, BlackRock, some things you need to look at: the expense ratio, the holdings, the risk potentials or
That'll be
rating.
nice. That'll be nice.
Then we're going to get into these REITs. A lot of
Hmm.
people don't know that you can actually invest in real estate.
Yeah.
Most people think you got to actually go out there and buy the physical real estate, but no, you can invest in real estate in the stock market as well. Not only real estate for like, you can invest in like commercial real estate as well. Um, so that's a big thing. And then what else do I have up here? We're going to teach you technical analysis. We just
Hmm.
talked about that.
Yeah.
Technical analysis. So instead of looking at fundamentals, looking at balance sheets and stuff like that, you can just kind of look at some of these charts. And once I kind of show you some of this, you'll be like, okay, now when I see those charts with all these lines and arrows, it all makes sense.
Yeah.
When you first look at it, it just look like a bunch of lines and it'll just look stupid because you just get frustrated. But
Hmm.
and then not only we're going to cover technical, we're going to cover some fundamental analysis as well. And
Okay.
so
That's
how
good.
to do research on business model, not only what does the company do, what makes them so successful, what kind of competitive advantage do they have, their management, any corporate governance or regulations and stuff like that. Then you look at the most important things like the cash flow statements and their balance sheets, which is important. And we'll go over each one of those and why they're important and how you can just quickly look at it and make a quick decision. Then we go some statistics. You might hear this all the time: PE ratios and return on assets, return on equity, debt to equity. Like, what does all that crap mean? It's a lot simpler than you think. Um, and then how to compare a stock to some of its peers to determine, all right, is it actually doing good? So you might look at a company for like Tesla, right?
Hmm.
And you compare it to an NIO, and you
Neil.
might, yeah, in Neo, like if you quickly look, even though Tesla's a great company, you realize that their PE ratio is like 3,000 or something like that, when the average PO is like 20. You know, so that's something you can look at. We'll cover. Then what else I got on here? I got uh, goals and strategies. You could just blindly jump in investing, but you really need to have a goal. Whether it's a retirement goal, a yearly goal, monthly goal. Then once you create your goal, then you can create a strategy. So if you long term, we might tell you, as we just covered, index funds. If you just want to make some quick money, then we'll cover maybe some swing trades or doing some day trading. I'll give you a portfolio strategy that you could kind of implement. And then we might talk about dividends. And I'm not going to talk about dividends too much because dividends has its own course, right?
Yeah, that's a whole course that probably we have to look into uh, to explain to people so that they can also understand. Know that.
Yeah, because you, like me, know those dividends, when those dividend payments start coming in, they don't stop. If you pick the
Yeah.
right stocks, you get those literally for the rest of your life.
Yeah.
And so I'm gonna teach you not only, what are dividends, how you can earn dividends, how you research dividends, and all kind of little secret tips. And you learn about these dividend aristocrats and dividend kings. When you learn about these might change your life. And
Sure.
then I don't have any slides on that, but we'll probably go, not probably, we'll discuss option trading, which is my new
Okay.
thing.
Sure. Sure.
And
Okay.
that's it for today, brother. I don't have
Yeah.
anything else.
Sure. Thanks so much.
Thank you, and I'll catch you next time.
Sure.
Thank
Bye.
you, Maria. Thanks for joining.